Good morning. Welcome to Local Business Focus. I'm Sally Barker. Joining us this morning is Michael Deegan from Do Financial, proud station sponsor. Good morning, Michael.
Good morning, Sally.
Now, today we're going to talk about refinancing and other tips to reduce your payments.
That's it.
So tell us a little bit about, there's a lot of people, they go out there and they get themselves a loan and they just think, well, that's the way we stay. Now, is it now we're moving into a bit of a different mindset where we're talking more about refinancing to get better deals?
That's it. There's a lot of media coverage at the moment with changes to interest rates, different bank policies. The pressure from the regulators, ASIC and APRA, are causing banks to shift their interest rates out of cycle. What we mean by that is normally we wait for the Reserve Bank to come out with their announcement first Tuesday of every month. Mm-hmm. And traditionally we've seen banks change interest rates according to what the Reserve Bank might do. But we're certainly seeing that with the pressure that's on lenders at the moment, they are changing interest rates out of cycle and almost on a fairly regular basis.
Really? Well, that's quite important. If we are to go into a bank and with refinancing in mind, is there a different language we need to be having in our conversations?
Certainly. Look, a lot of people are probably fairly keen to try and get a better deal. Obviously, we want to have that cash back in our pockets. We don't want to pay more interest than we should do. What we probably want to be really careful, though, for people is that they don't just sort of jump at every rate that they see out there that might be quite appealing because it's lower than what they're paying at the moment. So we probably want to get them to have a mindset where they actually challenge their current bank first to see if their current bank is actually willing to reduce rates. You notice quite a fair bit that banks will offer particular products and lower interest rates for new customers to try and get them on board. Yeah. They don't necessarily always automatically pass that on to existing customers. So what we'd like to encourage people to do is really go back to their bank and say, hey, look, I've noticed this in the market at the moment. Can you do better on my mortgage?
So do you think people, we do look at things like that and we do see a great offer for new customers at another bank. Instead of going to our existing bank, we just jump ship and go, well, there's a better offer without negotiating where we are?
We do see that quite a lot. So we would encourage people to have a look at all the costs associated with refinancing, because even though the new rate at the next bank may appear, the grass is not necessarily always greener on the other side, you might be getting a better interest rate to start with. However, the fees to move may actually outweigh any interest cost that you'll save. And also in the current market where rates are changing on a fairly regular basis, new bank might not actually have the better rate in 6 months' time. So you may have actually gone chasing for the rate only to find that in 6 months' time it's not going to be the best in the market anyway.
All right, so now let's talk about when we're just paying interest only on our loans. Is that, for some people, that might be an effective way or an effective strategy, but does it work for everyone?
No, it doesn't. In the Australian Financial Review, they've spoken about how Australians seem to have this love of interest only, and certainly that would be appropriate for investment property lending if you still have debt on your owner-occupied property. However, there seems to also be quite a love of interest only for people for their primary residence debt, and we would probably question whether that's really the right thing. So people would need to consider their own individual circumstances, of course, and seek guidance from a financial professional, because in the current market, banks are also going to put up interest rates for interest-only products on their own home loan. So it's actually going to cost them more in the long run.
And then you have to look at, the way the property market is as well when you're sort of considering that. Now, we do expect interest rates to be quite volatile, and there's always that discussion about, we talk about the RBA bring out their after their meeting, first Tuesday of every month. Why don't we get the deal that the RBA announces?
Sure. So when we refer to the RBA shift in rate, that's the cash rate, and the Reserve Bank will generally move in lots of 25 basis points, so 0.25%. We find, though, that for the banks, they actually have a different base working out their cost of funds, and they borrow money from the international money market, they borrow money from other banks, etc. So even though there is a strong influence from what the RBA does, it's not the only factor for lenders in making up their interest rates. So people probably just need to do a little bit of extra research on that for themselves, so they can actually understand, how the banks do actually make up those interest rate changes.
And because it does, fluctuate, we can go for variable or fixed rates. And like we spoke about a little bit earlier, about chasing that better rate from a better bank, sometimes a fixed rate might be best with your current bank rather than chasing, your variables or another bank.
Yeah, that's right. Depending on what your strategy is for the property at the time and how long you're going to spend in that property, we would definitely encourage people to consider fixing their rates, not necessarily fixing all of it, but fixing part of it and have some as variable. But again, you'd need to look at your strategy, your individual circumstances to make sure that if you do fix, that it's going to be appropriate for your individual circumstances.
I mean, as a family going out and buying a home, this idea of having a strategy and, it could be quite a foreign idea, really.
It could be. So, in that instance, if you don't really understand how interest rate structures are made up and those different strategies, then we'd encourage you to seek advice from a financial professional.
Very good advice. Thank you so much for joining us this morning on Local Business Focus. Michael Deegan from Do Financial, proud station sponsor.
Thanks, Sally.